It is June 12, 2026, and the Nasdaq exchange is opening its doors to the largest initial public offering in history. SpaceX is going public. This bar chart shows the scale of the demand. At $1.75 trillion, SpaceX towers over the entire gross domestic product of Australia. In a single day, the company is raising $75 billion, a figure that breaks every historical record for a new listing. But the timeline shows how close this value came to zero. These markers represent 3 consecutive orbital launch failures that left the company days away from total bankruptcy. How does a business that burned through its initial capital in a series of public explosions eventually convince the world to hand over nearly $2 trillion? Engineering solved the physics, but the American financial system provided the bridge. This specific architecture allows for high-stakes experimentation by distributing the cost of failure across a massive pool of investors. In 2008, the entire global financial sector faced a total breakdown. Credit markets seized up and banking giants collapsed. Trillions of dollars in household wealth vanished as the world's financial engine ground to a halt. Simultaneously, Musk's own empire reached its breaking point. SpaceX's first 3 rockets shattered on the launch pad, while Tesla faced a massive cash bleed during the worst of the economic downturn. For a few weeks in 2008, both the global markets and Musk's mission were facing a synchronized collapse. This period forced a reset of risk pricing, the market's method for valuing a business based on its ability to learn from failure. On the macro level, the market cleared out toxic debt and rebuilt a more stable financial infrastructure. Musk applied this same logic. He convinced his remaining backers to view the rocket explosions as the price of admission. Each failure provided the engineering data necessary to eventually master reusable flight. This illustrates a specific trait of the American market. It converts catastrophic losses into the information needed to fuel an eventual success. Survival in 2008 gave SpaceX the runway to achieve technical dominance. By 2025, Starlink was generating $10 billion in annual revenue, and their reusable Falcon 9 rockets were handling the vast majority of all space-based traffic. The current $1.75 trillion valuation is the market finally pricing in these years of consistent performance. This IPO is being driven by more than just large banks. Retail investors, including teachers, nurses, and engineers, are buying shares through their personal brokerage accounts. These investors are following the same path as the colonial farmers who funded the railroads. The focus has simply shifted from terrestrial tracks to satellite constellations and Mars transport. The United States remains one of the only places where an individual can leverage deep capital markets to turn failures into a global aerospace monopoly. Investing in SpaceX is the latest action in a 234-year-old financial experiment. It is a bet on a machine designed to turn collective risk-taking into technical progress.